Hello and thanks for checking out ChartGuys.com. We're proud to be one of the most successful technical analysis communities online, teaching you the skills to become a more confident, effective, and informed trader. Join our community of hundreds of analysts worldwide working together to learn the charts, generate profit, and achieve financial independence. For access to daily live chart analysis and market coverage, a thriving chat community, along with dozens of hours of exclusive educational materials. We look forward to seeing you. Let's check out some charts. Hey everyone, checking in on SPY, VIX, Netflix, Facebook, and TRVG on the daily weekly time frame. So starting it off with SPY, we have been consolidating. This is the most consolidation that we've seen in 2018. It's the first time we've lost the exponential supports in 2018. It's the first bearish MACD cross, so all of these signs are the first real consolidation we've seen of the year. And it certainly took long enough for the bears to show up. This is normal and healthy. This is a very healthy consolidation period at this point. Support is down at 280.68. The middle Bollinger Band support is coming into play. And when you look at things on a weekly perspective, we could pull back very easily. Well, I won't say very easily what I was saying. If we pulled back to 275 or 270, it would still be an extremely strong weekly chart. So this weekly chart has not consolidated. Just like the daily chart, it looks very similar, just a much different time span. And when we do consolidate, we will see multiple weeks of red in a row, and everybody will feel like the sky is falling because we've been lulled into a sense of complacency with the bulls in absolute full control for 14 months. But it will be healthy. I mean, we need to see some real consolidation. We haven't lost the weekly exponential supports in, about 4 or 5 months or so. So checking in on VIX, we had a spike with the weakness the past couple days, and we had a little bit of indication to be looking for some profit taking. Number one, the market bulls buy the dip like it's their job. Number two, every time we're above the upper Bollinger Band with a big upper wick, we see consolidation. That's what the pattern has been back over the last 3 months. It's happened 3 times. We had a bit of an upper wick. We're above the upper Bollinger Band. RSI, we hit 70 back in mid-November and pulled back from the top. We just broke 70 and now we're pulling back. So it's healthy consolidation at this point. We will form a higher low. Anything above 1076 will be a higher low. And from there, we're going to be watching, can the bulls keep it together and keep forming higher lows and higher highs. Weekly time frame, 200-week moving average has rejected the price a ton. Not a whole lot to see on this weekly chart aside from strong closes is what the bulls are looking for. The less of an upper wick, the better, as that shows profit taking. And, you know, the year high is up at 1728. We didn't get too far from that, so definitely worth keeping an eye on. And that just shows the lack of any fear in the market over the past year. Netflix started to consolidate finally at the open when the bulls were unable to break the high of yesterday. We saw profit taking, and then market weakness on the reaction to the FOMC caused further downside, and we closed near the low of the day. So we knew Netflix was due to consolidate. It required losing the upper Bollinger Band support as step number one to see the start of consolidation, and now we have it. So support from here is after the low of today, 269.58. I'm looking down at 268.76. Exponential moving average support has been holding all year. Same thing here. We could easily pull back to the 250s and still be a very strong daily and weekly chart. So here's the weekly chart forming a bearish reversal candlestick. The upper Bollinger Band on the weekly will be tested likely next week by the time we get down to that level to see it tested on a back test as support. Facebook earnings came out, and pretty wild after-hours action on Facebook. And you can see we had an initial dump, and we dropped all the way down to 177s, and then a short squeeze. The bulls just poured in and ran it up to all-time highs, and now we're seeing healthy 5-minute consolidation. So this does favor the bulls. It favors the tech sector bulls. Amazon and Google, with earnings approaching tomorrow after hours, are responding well, and we are looking for the tech sector to respond well as well. You can see the bid is 15 cents above where XLK closed. So congrats to the bulls turning that around and looking for all-time highs tomorrow. TRVG, we've been watching this one with a really nice bull break, and we already hit all our targets for our swing trade, but there's going to be another re-entry here. The middle Bollinger Band support is coming into play. We'll be watching that in the 780s tomorrow. And we're going to be looking for a bullish reversal candlestick to indicate that our higher low is forming and that the bulls are ready to see some bounce. Not expecting to make it back to $10 in the near future, but looking for a bounce back into the upper $8 range, which should give some nice gains. So watching for the hourly higher low, where the hourly pattern now is lower highs and lower lows, and we're looking for it to shift to a higher low and higher high. Weekly time frame for TVRG, back testing the middle Bollinger Band. Bulls ideally want to hold that level. Inside bar on the weekly time frame is pretty much a sure thing with how the rest of the week is shaping up. I appreciate you watching. We'll check back in tomorrow. Congrats to the Facebook bulls.